And now, why would you ever sell something going up in value 160% a year, right? You only sell things that are liabilities. You don't sell assets. You know, Brett, like I raised $2.2 billion at blended rate of 1.5% interest. I can go and I raise billions of dollars at 1 or 2 or 3% interest, or make it junk debt. The junk bond index right now is 4.5% for a 5-year money, right? So I go into that market and I start raising huge capital at a cost of capital of 3, 4, 5, 6%, whatever you want to call it. And I put it into an asset which is yielding 170% a year for the past 10 years. You want to be conservative? You can say, Mike, you're crazy. It's not going to do 170%. Okay, back it down by a factor of 10 and say it yields 17%. Borrow money at 6, loan it out at 17, arbitrage the difference. How much are you going to do with that? Well, all of it. All of it. What do I need? I need a publicly traded company that can file a registration statement. Where are they? Here in the US, in North America. It's happening right in front of your eyes. And Brett, it's never happened in the history of the world. You didn't see this with silver. You didn't see this with gold. You didn't see this with mortgage-backed securities, right? Mortgages aren't scarce. Houses aren't scarce. Buildings aren't scarce. Land's not even scarce. Silver, gold, and oil are not scarce. There's only one institutional grade property that is truly scarce that's ever become an investment grade asset for the public markets, and that's Bitcoin. And that was not the case 2 years ago. It is the case now. Look at the stock prices of all these Bitcoin miners, right? And stare at it and think about it a little bit and ask yourself the question, what happens if a company generating $200 million a year in revenue, running an 85% margin, gets valued at 15 times revenue? What happens next, right? There's a fire here, right? And the simple thing to do is just roll up the entire industry and buy all the other miners. The next thing to do is buy all the equipment because it's fixed. And the third thing to do is buy all the Bitcoin. Bitcoin's the best performing institutional grade asset of the year to date. It's up 344%. And that's an acceleration of 2x over its growth rate for the past decade, which was also the most impressive performance. So I as an aeronautical engineer, this is like going through the speed of sound. If we went any faster, we'd rip the wings off the airplane. Like if you have any experience with a boat or an airplane or an airfoil, there's a certain speed you can get to, at which point you just start to rip the wings off or you start to move against the forces of nature. And I think if I said to, you're saying to me, well, we're disappointed. You're up 340% in 12 months. Okay, so I get what you're saying. We're disappointed that Apple Computer hadn't bought $50 billion of Bitcoin.
Yeah.
First of all, a lot of people, publicly traded companies, have a problem holding the property. And the problem holding the property is either it would take about a year, 6 months to a year to establish a relationship with a crypto custodian. When you go to set up your Coinbase account or a Fidelity account or whatever, if you're publicly traded, you've got armies of lawyers and accountants going through due diligence and compliance check and security check and the like. I mean, bear in mind, most of these companies, most people that trade stocks have been using the same broker for 20 years. Most institutions have been using the same broker for 30 years. So having to actually come up with a new broker, a once in 30-year thing, I think that slows people down. I think the second thing is the FASB accounting treatment of indefinite intangible. It's hostile and prejudicial to a CFO or CEO that has a optically pristine P&L or balance sheet. If I buy $1 billion of Bitcoin, it goes down by 50%, then it goes up by 20%. I report to the world that I have $500 million in assets and I had a $500 million operating loss. Even though neither of those things are true, what I really have is $10 billion in assets and a $9 billion investment gain. So I got to sympathize. I mean, the one intelligent pushback from someone as to why I don't buy Bitcoin, it's not the volatility of the asset, it's the optical or the accounting volatility, because 30 years of pristine operations at a company with a perfect P&L and a perfect balance sheet and gross margins that you can predict plus or minus 1% for 8 quarters, that gets totally blown out of the water if you replace your treasuries with Bitcoin. So I think that that's a drag for public entities that are GAAP accounting reliant. And I think the third drag is that there are trillions of dollars, Brett, that by charter and by law and maybe by tax code can't own property. They have to own security. The distinction being $1 billion of Bitcoin in an ETF or $1 billion of MicroStrategy stock as a security, $1 billion of a Bitcoin miner as a security, $1 billion of Bitcoin as property. Now, I mean, there's a lot of advantages to owning property outright versus the security, but the disadvantage is if I raise $10 billion from 100 pension funds and I'm an SEC 40 Act investment company and 90% of my portfolio has to be in securities, undoing that would take 3 years and Herculean effort, right? And maybe I lose my investors. So I think that one of the impediments has been the lack of securities that offer Bitcoin exposure. I mean, the obvious elephant in the room is the lack of a Bitcoin ETF for the spot market. Keeping in mind one more observation, if I look at my ticker right now, Marathon is trading at $64 a share. It's a $6.5 billion market cap, and today it traded $1 billion of liquidity. Riot today traded $600 million in liquidity with a market cap north of $3 billion. And then you've got, in rapid succession, you've got Bitfarms, which is $1 billion plus publicly traded miner. You've got Hut 8, that stock has tripled in the past 3 months. It's a $2.5 billion miner. Bit Digital, I could go on. There's about 12, Hive, Argo. I think that if you say, well, what's the progress in 12 months? Well, when MicroStrategy did our due diligence, you know, Brett, I couldn't find a single company holding $3 million of Bitcoin on their balance sheet anywhere in the public markets. Couldn't find anybody. And so today we have like 36 companies, and you've got MicroStrategy and Tesla that have taken north of $1 billion positions. You've got Square and Marathon that have purchased, $400 or $500 million worth of Bitcoin on their treasury. You've got a dozen Bitcoin miners. You've got 2 futures ETFs. When the FDIC finally approves banks to hold Bitcoin on their balance sheet, everybody will want to buy it. Nobody will want to sell it, and you won't be able to afford it. So in this particular case, I think the same holds true, which is you're seeing the motion, you're seeing the 350% uptick. You have a lot of obvious liabilities that are holding back Apple and Google and Facebook from buying $50 billion each. I thank my lucky stars for those liabilities. When I was banging away on a computer buying Bitcoin as fast as I could at $9,500 a coin, and I bought $175 million worth of it in like 2 days, hoping to hell no one figured out I was buying it. While I was doing that, I consoled myself with the thought that it took me 3 months to get KYC'd and get the account, and they put me through hell. And if it's that difficult to be able to buy Bitcoin, then I figured that I'd done the work and everybody else was going to come after me and they were going to pay double or triple. And a year later, it still takes 8 weeks to get a KYC AML account to do institutional grade Bitcoin acquisition as property. And you pay 6x that much or 7x that much. When FASB cures the accounting, and I think there's consensus that we'll eventually go to fair market accounting, I just don't know when the SEC gives you a spot ETF, when FDIC lets banks hold Bitcoin on their balance sheet, right? At that point, you won't have these headaches, but you will be paying $500,000 a coin or $1 million a coin. And so be careful what you wish for.